Yeah. Yes, my dear, one second. Yeah, hi. This is Ravi Kanth Miriyala. Today, as part of our quick revision of CA final, all the standards. As part of that, we are doing Ind AS 34 is first I will take up. That is interim financial reporting. And because it is Ind AS 34 revision will not take too much time, as you very well aware. Okay. And next, I'll start with Ind AS 33. Obviously, within 1 hour, 33 and 34 both cannot be completed. That's why after this class, with 15 minutes gap, I will be starting, part number 2 of Ind AS 33 once again. Okay, right. Yeah, before going to the main subject, a small information. Yeah, we are starting a new batch that is on financial reporting, which is going to be started from January 27th. Yes, January 27th. This is not September. January 27th, 2022. Okay, right. And it is going to happen in morning and evening, both batch. Only one batch, morning and evening, both the sessions, right? And morning 3 hours, evening 3 hours. We will be able to complete it entirely in 45 days. Yeah, but first 15 days, approximately 10 to 15 days, we'll be taking only morning class. And after 15 days, we'll be taking both morning and evening sessions. Right, approximately if not 45, because of this first few days gap, it may take another 7-8 days extra, but I will be taking totally 270 hours to complete the entire syllabus. In this, I will be taking each and every point, almost every question from ICA material, mock test papers, RTP paper, previous examination questions, almost everything is going to be discussed in detail, and conceptually each and every point is going to be covered. Fine, right. So at the end of the class, I can ensure that you are going to learn, right, 100% concept plus and full preparation for your examination, right? The students who are going to appear in May attempt and even November 2022 attempt, these two students, these two attempts people also, everybody can join this course, right? At the same time, one more course that is on GFRS. This is starting on 10th January. This is the old slide. Okay, 10th January we are starting this batch, GFRS. Okay, right. And this is only evening session, 6:30 to 9:30. It continues like that. Fine. Right, here also we'll be covering full ICA material, previous mock examinations, previous examination questions. Everything is going to be in detail. It's going to be considered. Next point is, what is that? We are going to take 25 classes, 25 into 3, that is 75 hours. We are going to complete the entire syllabus. I'm very sure. After the classes, you will be very happy with the subject, 100%. And I can 100% give you a guarantee you will get confidence in the subject. Okay, my dear. And one more information. Yes, Unacademy has started a program that is CA Iconic program. This is for CA final students, right? In this is Iconic program. It's a premium program, not like plus subscription. You will get more benefits actually. That is, one is doubt solving session. Yeah, doubt solving sessions. Whatever you will get a mentor. That mentor will be the first person to contact, right? He will clear your doubts. If he is not able to clear your doubts, he will direct it to us, that is the teachers, right? And he will help you in planning for your examination. Yeah, at the same time, there is evaluated test series. For each paper there will be 3 examinations. One is when we are through with 40% of syllabus, one exam, 80% of syllabus another exam, 100% of syllabus one more exam. Like that you will be writing at home and you will be sending the copy. We will be evaluating your whatever you have written. and subsequently we'll have a discussion, right? Where are you lacking, where you need to develop, correct? Now for your growth we will be suggesting something, right? That will be obviously very much helpful to you and helpful for your plan to succeed this CA final exam. And a plus subscription student generally will not get the printed books, but this subscription, iconic subscription, people will be getting the printed material. Okay, that is the another additional advantage. Yes, evaluated test series, I told you 40, 80, 100%, and we'll have a discussion over a phone, right? Obviously, correct na? The expert will be giving you the feedback and everything, right? This subscription, when you are subscribing to this iconic program, use the code YESHAS live, YESHASLIVE live, YESHASLIVE live, so that you will get 10% discount as well. And this is there for group 1, group 2, and combination of groups. If some student has taken group 1 only, group 2 only, or combination of group 1 plus group 2, you can use the same code, and this iconic program is there for both of them. Okay, yeah, this is about the our information. Chalo, let's start with. Now let us start with, first, as I told you, Ind AS 34 first I will be starting with. The reason Ind AS 34 is a small one, okay, which we can complete it just like that. Yep, 1 second. Ind AS 34. Yeah, see, Ind AS 34, interim financial reporting, IFR is my short form. See, interim financial reporting. Interim means what? It is for you are preparing the financial statements, okay, for less than 1 year period. That's all. This is less than for it is not for the full financially. It is only for the less than. It may be for quarterly also. You may be preparing for 6 months once also. It is not necessarily always quarterly financials. Not necessary. It can be even 6 months financial statements. That is one. Yeah, we are preparing a financial reporting, correct na? Right. First thing, what is that? Why are we prepare? Why do you need to prepare this interim financial reporting? See, you are giving the information as on 31st March 2021, okay, and the next information if you give after 1 year, 1 year time, 1 year gap is there, especially, correct na? 1 year gap, in this period of 1 year, what is happening with your company? The investors, the market has no idea, or maybe there may be some, what is that, rumors, there may be some nonsense information which may be going in and out, correct, because of which these people may take a wrong decision and it may lead to loss of the investors' money. That's the reason, correct. If it is a listed company, mandatorily you are supposed to prepare financial statements quarterly. You are supposed to give the financial update. Preparation of interim is giving an update. Okay, suppose quarterly if I give financials means what? Yeah, what is the update for the first quarter? Correct, right? What is the update for the second quarter? It's always like that. Okay, right? So objective is to update the financial information from the last reporting to current reporting. You wanted to give the information to the users of financial statements so that they can take more transparent decisions, financial decisions, whether to hold the share, whether to, correct, they take their relevant decisions. Got it? Right. So here, what is that here, sir? Interim financial statements means how do we prepare? Correct. First and foremost thing, my standard does not mandate any company, or you company should prepare quarterly, half yearly. No, the standard will never mandate any company when to prepare, what to prepare. First point to note, right? Second point is what? We don't mandate, but if the company has to prepare interim financial statement as per the maybe another act, or maybe that is their requirement. Suppose a banker has given a big loan, okay, some 5,000 crore, 10,000 crores loan is given by the banker. So in the loan agreement itself, they have told every quarterly you have to prepare financials and give it to me. Even though you are not a listed company, you are preparing. Why are you preparing? It is as required by the loan agreement. Correct. So that loan agreement is mandating you when you are preparing such interim financial statements, then you please come and follow my standard. That's all. When you are preparing as per the law or as per the contract, as per any other reason, follow my standard. But we will not tell who should follow, who do not need to follow. Okay, next. Right. See, suppose I am preparing financial statements or interim financial statements, but in interim financial statements, I don't want to follow 100% of Ind AS 34, sir. Slightly I will follow, sir, or some 70% of Ind AS 34 I will follow, 30% I do not follow. That's your problem. If you don't want to follow, don't follow. I don't have any problem actually. Okay, but if you follow less than 100%, you got my point? If you follow less than 100%, never ever say in any of the financial reporting, any of the financial statements, don't quote Ind AS 34. That means what? If you want to say that our financial statements are in line with Ind AS 34, it has to be 100%. It has to be 100%. That is recognition, measurement, presentation, disclosure, everything should be in line with Ind AS 34. Then only you can say your financial statements are as per Ind AS 34. Otherwise, you don't have right to say that. This is one important point. Why so? Why so means, yeah, see, all these listed companies, as per the listing agreement, clause number 41, yeah, Indian listed companies are supposed to prepare quarterly financials. But listen, those financial statements are not in line with interim financial reporting actually, because their format, the statement format procedure is not as required by Ind AS 34. That's why those companies, if you see any of the financial statements, interim financial results, basically, they never quote saying that Ind AS 34 complied. No, it is not possible. They cannot. First and foremost important point is that. Okay. Yeah. Next, why is that, sir? Because they have to follow SEBI regulations. As per the SEBI, whatever they have given the format, that format only they have to follow. They don't quote that they are in line with Ind AS 34, but actually their financial statements are, recognition, measurement, exactly what is said by Ind AS 34, same recognition, measurement are followed by these listed companies, that you remember. Okay, next. See, when you are preparing the interim financial statements, okay, you can give a financial statements of complete set, or you can give condensed set. Okay, what is complete set, what is condensed set? It is your option. Okay, complete set means what you prepare for the year end. That means full perfect proper balance sheet, proper profit and loss, yes, proper cash flow statement, SOCI, that is statement of changes in equity, notes, everything in detailed information you are supposed to give it. Right. Next, condensed set. Condensed set in the sense, it's going to be small. Abridged information. Abridged in the sense, we are not going to give detailed information. As I told you, this interim financial reporting is going to be a update. It is a financial update from the last reporting period to current date. That's why we don't need to give entire detailed notes. No, not required. Detailed breakup for each information, not required. Little information, little means which will be useful for their decision making. That's all. That information only will be given. That's why just look at the information. Entity has an option to prepare this, either using the complete set or condensed set. This is condensed set. Okay. Yeah. If you say complete set, if you say it is a complete set, this is same as at the year end. Correct. And it is going to be complete information, detailed information we are going to give it to them. And this is condensed set. It is a typing error. Okay, right, condensed set. Yeah, it is a condensed set. If it is a condensed set, what do? We'll prepare condensed balance sheet, condensed P&L, condensed cash flow statement, changes in equity, and selected explanatory notes. We don't give the full notes. No, we do not give full notes. We will give only selected, which is relevant for their decision makings, for the user's decision making. Only that much information we are going to provide it. Okay, not the entire information going to be given to the users, right? and it is just an update. This is what I was talking about, that you have to keep it in mind. This is an update. Yeah, it includes what? This balance sheet and P&L cash flows mein, it includes the heading and subheading. That's it. Maximum heading, subheading. We are not going to give full bifurcation. Let's say example, trade receivables. That's all. Trade receivable, one number. We don't give further, correct? Less than 6 months, more than 6 months, correct? No. All that information we don't give. Minus provision for doubtful debts or allowance for doubtful debts. Sorry, we don't give that information. Why? Not required here. It is already deducted. Net number only will be given as a trade receivable. That's it. PPE. That's all. We'll tell one number. PPE minus accumulated deposit. No, not even accumulated. Directly net number PPE is this much. We don't give the full table of, correct, gross block, net block. No, that information is not necessary. Right. At the same time, we will give the present. We'll present basic and diluted EPS. Yes, this information also is supposed to be provided. Okay, right. And when I said selected explanatory notes, correct. Now, what is that, sir? Only significant events and transactions. Correct. Which are, right. Some examples also are provided in this information. Okay, which are only required to understand the financial position, financial performance of the company during this interim. Okay, during this interim, this is happening. Right. All right, 1 second, sir. I'm in live class. You can say once. You can sit, but I cannot talk. Yeah. Examples are change in accounting policies, and its significant estimations. Okay. If there are change in accounting policies. Okay. Right. Just obviously that is not a small information that you are supposed to take it up. Right. Unusual item. If there are any unusual transactions or unusual items, yes, that's I told. Significant areas, significant matters. Okay, significant areas, significant matters are going to be given. Fine. And some more information. Suppose in the interim period, if you have given any interim dividend, yes, the dividend information you can give. Yes, segment information mandatorily. Yes, but it's not like so detailed segment information, right? Broad information, like what is the segment result, segment revenue, sales. Not like one full page of information. Little abridged information only we are going to provide it. Right. Events occurring after the balance sheet date. Yeah, events occurring after the balance sheet date, which is material. Okay, that you are going to give it. Next, change in capital. Yes, change in the capital structure. I mean capital structure in the sense if you have issued any further new equity share capital, preference share capital. Okay, right. Or if you have taken any borrowings. Got my point? Yes, that information also, yes, obviously you are supposed to provide it. These are the just examples. This is not exhaustive data. This is a basic information. Whatever is important to the users, that we are supposed to decide it, that only supposed to be provided to the users of financial statements. Okay, right. And next important subtopic is period of IFR. Correct. For which period of IFR? Right. See here, I am assuming the period is 30th September. Okay, 30th September. When I say 30th September 2019, assume my company is preparing quarterly financial statements. Quarterly preparation, we are doing it. Right. So under that circumstance, what do you do? Current period, you have to give current period and comparative period. Right. So what is the current period? Current period will give balance sheet. Balance sheet is, as you know, it is as on. Yes, balance sheet as on 30th/9 will provide. Correct. But comparative will be not 30th/9 2018, my dear. That is 31st March 2019. Just last year end. Last year end is 31st March 2019. Whether you are preparing it on 30th/6 2019 or 30th/9 2019 or 31st/12 2019, under all the circumstance, last balance sheet date information only is going to be comparative information. Okay, right. Next, profit and loss information. Here basically we are supposed to give two separate columns. Okay, first one is P&L for current interim period. That means which is for 3 months. 3 months in the sense, 3 months in the sense what? July, August, September. This 3 months information will provide. Means in these 3 months, what are your sales, what are your expenses will be given. Right. Next, current cumulative P&L. Cumulative P&L means 6 months. 6 months means what? From 1/4 to 30th 9. From 1/4 to 30th 9, whatever is your sales, everything is going to be given. Okay, that means Q1, Q2 cumulative information is going to be given. Yeah, here also same in the sense what? Here also for 3 months means what? 3 months means here also like July. Okay, July, August, September. July, August, September of 2018 you are supposed to take it up. Fine. And here also what? 1/4/2018 to 1/4/2018 to 30th 9 2018 you can take it up. 1/4/2018 to 30th 9 2018 you can take it up. Got it? Right. P&L for 12 months. This is the third situation which is seasonal. This is applicable for only seasonal business companies. If your company is into seasonal business, okay, sir, my sales are only seasonal, sir. Okay, in this, I mean, say, in 3 months only I will have more income. Balance 9 months will have light income, sir. Okay, such kind of business, like say cracker business, something like hotel business, maybe in what is that, like say example Kodaikanal, Ooty, such kind of places, that business will be seasonal. You cannot expect. It's not that no customers will be there, but customers will be there, but customers will be packed during some particular season. Okay, right. If it is a seasonal business, if you are running, then this information, the first two columns information you have to provide. In addition to that, the third information also you are supposed to provide. Okay, what is third information? Full 12 months information. 12 months information means, observe, from October, that means 1st October 2018 to 30th 9 2019 tak you are supposed to give. And comparative also want 1/10/2017 to 30th 9 2018 tak. Exactly last 1 year 12 months information, comparable 12 months information you are supposed to provide it. Okay, 12 months information you are supposed to provide it. That will be more and more useful. Got it? Next, statement of changes in equity. Statement of changes equity, current financial year to date. Year to date in the sense what? From 1/4/2019, from 1/4/2019 to 30th 9 2019. Okay, the same way here also 1/4/2018 to 30th 9 2018, like 6 months cumulative information from 1/4 year to date. Okay, from the beginning of the year to the date of balance sheet you are supposed to give the information. Next, cash flow statement. Cash flow statement here also obviously year to date. Year to date means same information. 1/4/2019 to 30th 9 2019. That is 6 months data. 6 months data you are supposed to provide. At the same time, if it is seasonal, then second line is important. Then you have to prepare, because you had prepared already P&L for the 12 months. Then you have to provide cash flow also for 12 months information. Okay, 12 months information you are supposed to provide. Compare period for 12. Correct na? 12 months information you are supposed to. 12 months information you are supposed to provide. Done. Right. Now let's look at the next and foremost very important information. See, recognition and measurement. See, in the examination also, recently in this, December 2021, they asked some question, maybe some 4 to 6 marks question. I don't remember exactly how many marks. Maybe 4 marks or 5 marks or 6 marks. Okay, right. They have asked a question, but see, that question, that was not actually difficult. It is easy, right? But the point is, they always try to confuse you, or they always try to throw a biscuit on us. Okay, saying that, so this is seasonal company, something like that. My dear, for your information, with respect to recognition and measurement, actually there are no differences. If you are preparing for the year end, what all the rules and regulations you are supposed to follow, same rule and regulation, with respect to recognition and measurement, correct, you have to follow even if you are preparing financial statements for 3 months or 6 months or whatever, less than interim period financial statement. Same definition of asset, same liability, income, expense, at the same time same conditions to recognize, everything will be same. All the rules and regulations are going to be same. That is first and foremost important. Okay, right. Use the same accounting policies of previous year. Yes, obviously, generally. Does it mean that I cannot change accounting policy? No, my dear, you always can change, but as you know, when it is required by the Ind AS, correct, or when it makes more reliable presentation, when it leads to the change leads to more reliable information presentation, then obviously you can change the accounting policy. But here again, if you are changing the accounting policy, retrospective presentation you are supposed to do. What are you supposed to do? Retrospective presentation. That is, retrospectively you are supposed to do it. And one more important point, retrospectively you are supposed to do, but you don't need to give 3 balance sheets. This is by mistake I have written here. Okay, right. 3 balance sheets are required only with respect to final year. Year end ke liye 3 balance sheets are required, but not for interim. If you are changing, 3 balance sheets are not required. That is very clearly given under Ind AS 8. Okay, right. So it's very clear. You don't need to bother about it. When there is a change in accounting policy, retrospectively will apply it without doubt, but you don't need to prepare 3rd balance sheet. Yeah, balance sheets whatever I have given on the top, that much current year, previous year information, if you provide it, that is more than sufficient. Okay, right. Yeah, next thing, same conditions of recognition of asset, liability, equity, income, expense should be followed. That I told you already. Right. No rules for seasonal business. That is what. Yeah, he will tell something like that. Sir, dividend income, sir. Dividend income, I'm getting dividend income, more income in the first quarter, sir. And subsequently, you understand, next quarter 2, quarter 3, quarter 2, quarter 3, quarter 4 may actually you don't get any dividend, no dividend income, sir. That's why I want to spread this. Right. These are all I told you, biscuits. Okay. Why, sir? If this quarter itself is 1 year, if you assume, just example, if the quarter itself is this 1 year, what do you do? Will you defer the dividend income to the next quarters or next years? Will you defer it? No, sir, I will not defer it. So when you say I will not defer it, then obviously the same rule is applicable even if it is interim financial reporting. Even if it is interim, whatever, if you can defer it, you understand, if you can defer it as on 31st March, then you can defer even on 30th September or 30th 6. If you can't defer it as on 31st March, for the year-end financial preparation, then you cannot do even here also. Getting my point? Right. That is the foremost important matter. Next, apply estimations, materiality, and as usual, yes, whatever you apply it for the complete set financial statements, the same thing you apply it. There is no new change accounting, no new rules, no new, everything, all your standards, all Ind AS are supposed to be followed in the normal fashion, right? And one more thing, just a second, I'll take this to explain, right? This one, see, what do I say? Yeah, this is with respect to tax. Which tax? Income tax. Yeah, this is with respect to tax, income tax. With respect to income tax expense. Sir, income tax expense, how do you recognize it? Yeah, see, for this we have some small steps. Just a second. Yeah, So for this, what is there? What is there means, I'll say like this, just a second. Yeah, see, first step 1, I say step 1, step 2, step 3, something like that. Yeah, so what do you do here in this? First, you have to estimate it. Yeah, it is an estimation. Estimate annual income. Yes, estimate annual income. What is your profit? This is profit before tax for the full financial year. Yes, for the full year, annual. That is what you are supposed to do. Estimation is there in this question. Okay, you have to estimate it. That is 1. Right. Next, step number 2. Yeah, for this PBT, what is the taxable income? Right. What is the taxable income? And what is the tax liability? That your tax liability. Yeah, taxable income and tax liability you are supposed to determine. Okay, right. What do you do? Taxable income means, yes, we obviously start with PBT, some XX number. Then you will say add back the depreciation, minus you will say tax depreciation, that is section 32. That number you will, this you will say plus, this you will say minus. Correct? Something will be allowable, something will be disallowed, something like that. Then you will get taxable income. Correct? On that you will apply your 30% and your surcharge, your cess, everything you will apply. Then you will get tax liability. That's it. Then what do you do, sir? Then this step 2 number, let me say, yeah, you answer whatever comes, that is A. You answer whatever comes, this is B. Then what are you supposed to do? Then you are going to calculate percentage. This is only weighted average tax rate. Weighted average tax rate. Okay. Yeah. So percentage means what do you do? That is B by A into 100 you are going to apply. Yeah, you will end up something like, say, 20%, something will come. 20% you will be applying it on quarter 1. Suppose say quarter 1, quarter 2. Yeah, quarter 1, what is my profit before tax? Suppose 100k. Then we will say directly this is equal to, what is your tax expenditure? Tax expenditure is equal to into 20%, that is equal to 20. Sir, this is equal to 250, sir. 250 into 20% is equal to 50. This is your tax expenditure. Which tax expenditure, sir? This is same current tax expense. This is. But what about the deferred taxation? Yes, deferred taxation also in the same fashion. Yeah, in the same fashion. In the same fashion in the sense, right? What will be the deferred tax? Correct. Now, what will be the deferred tax amount? Deferred tax. What is your deferred tax expenditure for the current year? That you calculate. That same thing, like your taxable income, already we know it. Yeah, what is the deferred tax you will get for the full year? Yeah, the same information. Again, the percentage for current tax percentage may be 20%. You got deferred tax, you may get 10%. Something, just example I am telling. Yeah, same rate 10% you are supposed to apply it on deferred tax also. But here, yeah, you should be bit careful whenever there is a deferred taxation, right? Yeah, because deferred taxation, say what will happen, deferred taxation, say what will happen. Suppose, say example, yeah, in the previous year we made losses. Yeah, we made losses. We had reasonable, virtual certainty, not reasonable certainty. We had virtual certainty that we are going to make future taxable profits. That way we recognize a DTA. Yeah, you recognize a DTA means what? You must have recognized a deferred tax asset account debit to, correct, na? Deferred tax income. Okay, some 10 rupees like that you must have already recognized in the last year. Correct. But in the current year, suppose losses were how much, sir? Losses were 100. Example, losses were 100. Let me say 30%. So 30 you have recognized. Correct. So in the current year, you have got profits. Okay, how much is the profits? I got 250 rupees profit I have got. Very good. That means you must have offset with the profits. Correct. You must have offset with the profits. Then you will be paying tax on this amount. Correct. Na? You will be paying tax on this amount only, will be paying. Agree? Right. Under that circumstance, just think of, you have already utilized this 100. Correct. Na? Right. So that's why this entry which you have recognized in the previous year is going to be reversed now. Yes, because utilization, I don't have any more tax losses which can be carried forward. I don't have any tax losses because I have already offset this. I already offset it. That's why I cannot carry forward anything to the next year. Correct, true that is. That's the reason reversal entry means what will happen? Deferred tax expenditure account debit, correct na? Deferred tax expense account debit to deferred tax asset. So that same 30/30 will be out. Now remember, E30 is going to become deferred tax expense. Yes, this is going to hit current year profit and loss. Right. It is just because you utilized the previous year deferred tax asset, it is reversed in the current year. E expense also will come. This is in addition to the current year any other differences, temporary differences arising, that may be deductible or taxable temporary difference arising, right? This number is in addition to, but actually if you do one sum, then only you will get to know. Just remember, we are reversing a deferred tax asset. That information, if you can remember, your half job is done. Okay, these are all the few things. And one more with respect to tax. Okay, with respect to tax expenditure. Okay, suppose if it is a business income, yeah, if it is a business income, yeah, business income rate is equal to 30% applicable to my company, then yes, apply 30% only apply. There is some capital gains, sir. Okay, for capital gain we have a separate rate, sir. 25, 20%, sir, 15%, sir, 5%, something specific rate, a special rate is there, sir. Then apply that special rate only. Don't apply, it's not necessary that you are supposed, it is not necessary that you are supposed to apply average for this. No, your total income, suppose your total taxable income, yes, example, your total taxable income is equal to, right, it is equal to say 100 may 70 rupees is business income, 30 rupees is capital gain rate separately apply, this rate separately apply. That is first and for one more small point. Yeah, next point. Yeah, next point to consider. What is the next point? Listen carefully. This is rarely possible in the country, but the situation is there, and with respect to this ICA material, my questions are also there. That's why I just thought of covering it up. See, I am following current financial year. Okay, what is my financial year? Let me say I am following from January to December. January to December I am following. Correct. But income tax purpose, but your income tax purpose, you will be using which financial year? Your income tax purpose you will be using April to March. Correct na? April to March you will be using, right? So now what will happen? Your Jan to December financial year mein, January to December, correct na? So that is say January 2022, okay, to December 2022. In this time what is happening? You are under assessment, correct na? Financial year, I mean for the tax purpose, you are under assessment year 2022-23. This is the assessment year. But for April to December tak, this will be assessment year will be 2023 to 24. Aren't you falling in two different assessment years? Yes. Now what should I do? Now you have to apply separate weighted average rate, weighted average tax rate. You have to apply separate weighted average for this last quarter. This is the last fourth quarter, separate rate, and for this quarter number 1, quarter number 2, quarter number 3, separate rate only supposed to be taken up. Okay, you cannot follow for the full financial year one rate. Yeah, you have to calculate separate percentage. What is the taxable, I mean what is the profit before tax? That is step number 1, step number 2, step number 3. All these 3 steps you are supposed to calculate for this assessment year separately, for the next assessment year separately. Accordingly what percentage comes, that percentage only you are supposed to apply it. Got it? That's all, my dear. This is all about your Ind AS 34 interim financial reporting, a quick revision. Okay, right, now let us get into Ind AS 33. Fine, just give me a second. Yeah. Ind AS 33, we are left with another 20 minutes. I don't think so it will be sufficient to complete within this 20 minutes. That's why we have taken 1 more hour, but 1 more hour will become actually bit long actually. That's why I may take up one more standard, even though it is not said in the name of this YouTube video, but I will be taking it up. Okay, right, let's see how much possible, that much I would like to do it. Okay, right. Chalo. Now Ind AS 30, Ind AS 33, earnings per share. Yeah, this standard is obviously applicable to all the companies whoever is following Ind AS. Here there is no, it is not applicable to for 1, 2, no. It's applicable if you are following Ind AS, then it is applicable to you. That's it. Next, you are supposed to present both EPS in the profit and loss. That is, as you know, correct now, there is basic EPS and diluted EPS. Yeah. Is this applicable for standalone or consolidated? It is applicable for both. Standalone financial statements also you are supposed to do it. Separate financial statements also you are supposed to do it. Okay, right. So first let us start with basic. Yeah, basic EPS. That is simple. Profit or loss attributable to parent equity shareholders. Profit or loss attributable to parent company equity shareholders. Okay, right. Divided by weighted average number of shares outstanding during the period. Weighted average number of shares outstanding during the period. Okay, right. See, the point to be remembered, yes, it is outstanding during the period, not outstanding at the year end. Got my point? It is not outstanding at the year end. No, they said it is outstanding during the period. Means my shares were there only for first 3 months. Then yes, number of shares were there for 3 months. Number of shares into 3 divided by 12. You are supposed to use that number of shares are also for your calculation of basic EPS. Same rule is applicable even for diluted. Okay, right. Even in case of dilute, I will repeat once again, but just wanted to say. Suppose, as you know, for convertible debentures, correct? Now, convertible debentures are potential equity shares we call. What do we call? Potential equity shares. Right. Convertible debentures, suppose it has been issued on 30th/6. The convertible debenture only issued on 30th/6. Correct. So if you convertible debentures are, how many debentures you issued? 1000 debentures issued. If it is converted, how many it will be converted? So it will be converted into 2000 equity shares. Correct. No problem. But when you are taking as a weighted average number of potential equity shares, correct, outstanding during the period, you should say 2000 into 9 divided by 12 you are supposed to apply, because this convertible debentures only came into the picture on 30th/6, that is after 6 months. That means convertible debentures were not there throughout the period. That's why you cannot take directly 2000. No, 2000 into 9 by 12 you are supposed to apply. This rule is applicable for basic as well as diluted EPS. For both the things this is applicable. Okay, that point you need to remember. Okay, fine. This is the profit or loss. First we are talking about the numerator part. Yeah, profit or loss attributable to parent equity shareholders. Remember, it is parent equity shareholders. See, when I'm talking about, generally financial statements, it always mean, as per Ind AS, it always mean consolidated financial statements. That's the reason we always say parent equity shareholders ko what is attributable. By mentioning parent equity shareholder, that means what is attributable to NCI is not supposed to be considered. Okay, what is attributable? If you check consolidated profit and loss, my dear friend, if you check consolidated profit and loss, okay, your group profit and loss, some number will be there. Out of that, we will say, suppose it says 10,000 rupees, we'll say attributable to NCI. Okay, say example 100 rupees. That means 9,900 rupees is attributable to parent company equity shareholders, or something like that. It will be written. You check any of the companies, any company, whoever is preparing the consolidated P&L, consolidated financial statements, right? There will be detailed information given in the consolidated P&L. This number only is supposed to be taken as the numerator, okay, with maybe one or two adjustments which I will check. I will tell you right now. Got it? Next, after considering the following, E number, you have to make some small adjustments. Which one? One is tax expense. Yes, obviously, see, when I take PAT, okay, I should take PAT directly. Yeah, profit after tax. After tax means that is current tax, deferred tax. Both the taxes are obviously considered. Next, even though some income directly transferred to equity, it should be considered for the EPS calculation. Yes, this is one important point. Yeah, you must have taken, what do you say? Say example, for example's sake. Yeah, preliminary expenses are there. What is there? Preliminary expenses. Yeah, if I say preliminary expenses as per Ind AS 38, that is intangible assets. Yes, it says very clearly and straight away it should be charged to profit and loss, expense it. That's it. Correct. And as per, I think I don't remember the exactly section of some maybe 54, or I am not very sure about it. 58. Yeah. So section 54 of the Companies Act, I'm not very clear. Okay, na? That is security premium. Okay, whatever it is, section security premium, utilization of security premium money. Actually, out of it can be used for 4 or 5 reasons. Out of these 4 or 5 reasons, security premium can be used to write off the preliminary expenses, starting expenses. So you can use it right off. It is permitted by the Companies Act, but it is not mandated by the Companies Act, for your information. Suppose my accountant, my company did not follow 38, they followed this, because law is giving me one way to do it. Yes, so they have, what is the journal entry they passed? They paid preliminary expenses, so to cash. Correct. And they have used the security premium account debit, but not P&L expense account debit. Okay, they have adjusted it from the balance sheet. Cash is down, security premium down. It's like that they have done the adjustment. But for the yes, you have done it like this. Okay, fine, very good. It is as per the law, you did it. Excellent. But for calculation of EPS, basic EPS, even though you have adjusted it with the security premium in the balance sheet, but for the purpose of computation of basic EPS, you have to cut it from the PAT. PAT is a cut karna. PAT minus security. What is that? Preliminary expenses amount cut karna padega. Okay, getting my point? You have to reduce it. That is the first and foremost point to remember. Right. So that is this is related to that point. Next, what about preference dividend? Yes, see, we told you already, which is attributable to the equity shareholders. Yeah, what is attributable to equity shareholders? Only after paying to preference shareholders, then only it is something attributable to equity shareholders. That anybody will answer. Right. Listen carefully. First, preference shareholders are, preference share capital. If there is a preference share capital in the balance sheet, yes, first and foremost question you should ask yourself, is that preference share capital classified? What is the classification as per Ind AS 32? This is a classification as per Ind AS 32. Okay, yeah. So is this, preference share capital classified as a liability? Na? Preference share capital is classified as equity. Na? That you should ask yourself. Right, then check it. Sir, it is classified as a liability, sir. See, the minute it is classified as a liability, then preference dividend, whatever you pay, that is equal to interest might, that is called borrowing cost or finance cost. The company must have already followed effective rate of interest, EIR, effective interest rate. As per Ind AS 109, you must have already charged the preference dividend, whether it is paid, not paid, like liability, na, accrual basis, you must have already charged it to P&L. Since it is already charged to my PAT, I don't need to bother about it once again. Got it? Right. So preference dividend would have been already deducted before tax as a finance cost. So no adjustments are required. That is what written very clearly, right? And what about this next? Sir, no, sir, it was classified as equity. It is classified as equity. Getting my point? It is classified as equity. Okay, if it is classified as equity, then what are we supposed to do? Calculate the effective rate. Yeah, calculate the effective rate. Yes, EIR, IRR, that is IRR, EIR, whatever all the information is said. You are supposed to calculate the effective rate of interest for only for the purpose of, actually only for the purpose of, right, only for the purpose of the EPS, only for the sake of EPS, you are supposed to calculate effective rate of interest, and that amount is supposed to be deducted from the PAT. Then afterwards only you are supposed to calculate EPS. Okay, basic EPS will be computed afterwards. Got it? Right. Next, if preference share capital is, yes, if preference share capital is cumulative. Okay, if preference share capital is cumulative, right, one more information. If the preference share capital which is classified as equity name, this is all related to when the preference share capital, this is when preference share capital is classified. I say this very clearly. Preference share capital is classified as equity. Under that time also, if preference share capital is cumulative, then you have to apply this EIR, whatever I have told you, whether or not declared. Correct? Sorry, cumulative. Right. This is written ulta. If it is cumulative, then this line is applicable. Okay, right. Ulta, I mean, again, typing errors problem, obviously. Non-cumulative in the sense what? We don't have an obligation. Okay, the company does not have an obligation. Under that circumstance, deduct only when it is declared in the AGM. Deduct only when it is declared in the AGM. Okay, right. That is the matter. And one more small information. Yeah. See, early conversion of PSC into equity share capital at premium. Okay, I mean, actually it is a convertible preference share capital. Say example, it is going to be converted after some number of years. Okay, perfect. Now what is the problem here, sir? The problem is very simple. What do I say? Yeah, it is going to be converted after 2 years, but in the current year only our management has decided. We spoke to the preference shareholders, they also agreed, and we converted. But see, why are we converting? Because it is some beneficial to us, obviously. Otherwise, why will I propose this plan? Obviously, we do. Correct. If it is lost to me, I would have not proposed it. Correct. But I proposed means obviously it is useful to me. Perfect, sir. Now the question, right? Why will they accept it? It is useful to me, beneficial to me means there must be some loss to them. Mostly, yes. Now why do they agree to this? They'll not agree. That's why what do? I'll be paying some premium, extra money. So if I give some money, then obviously that will be somewhat beneficial to them, some partly beneficial to them. Then they may agree to it. At the end of the day, it is done. Agreed. Whatever the excess money you have paid, premium means excess than what? Excess than what we have spoken earlier, right? That excess paid over and above the liability, correct? Initially agreed terms, correct? Initially we said I will pay you 110. Now I paid 125. You paid how much? 15 extra. E15 should be the correct reduced from the PAT. See, E15 you must have hit debited equity. Why? Because preference share capital is already classified as equity. Since it is classified as an equity, right? Equity redemption, any excess or gain, correct? Any excess paid, less paid, I mean loss or gain will be debited or credited to equity only. It will not be debited or credited to P&L. So you must have debited to equity, correct? Some security premium account or some other account you must have debited, but for the purpose of calculation of EPS, that should be deducted from the PAT. Okay, that is first and foremost thing. Next, so we are through so far with what? The numerator part. Correctly speaking, numerator part is completed. Fine. Now look at the second thing, that is weighted average number of shares outstanding during the period. Yes, shares outstanding during the period. Chalo, let's start. Right, it need not exist. Correct. That's what I told you. It need not exist on the balance sheet date. I told you it was there only for the first 3 months. Yeah, first 3 months only 2000 shares were there, sir. Afterwards we redeemed it. No problem. It was there for 3 months. So into 3 divided by 12 you are supposed to take it. Okay. Right. Calculate in any one of the methods. Yes, there are 2 methods available. Any one method you calculate. Answer is going to be same. First of all. Okay. One is transaction method, I will say. Next one is balance method. Yeah, under these 2 methods, the number of days calculation will be just different. Otherwise, as I told you, answer will be same. Exactly same. Fine. Right. What is the transaction method? Number of days will be from the transaction date to the balance sheet date. Yeah, let's say 1/4, one date, 30th 6 another date. Let us say 30th 12 another date, 31st 12 another date. Your year end is equal to 31st March. In this case, what do you do? From here to here, transaction to balance sheet, here to here, transaction to balance, here to here. Number of days will be computed. 1/4 to 31st March, 12 months. 30th 6 to 31st March, 9 months. 31st December to 31st March, 3 months. Like that we will be computing. Okay. Yeah. And what is the balance method? What do you do, sir? Means today balance is how much, sir? 1000 shares, sir. Today balance is how much, sir? 1200 shares, sir. Today balance is how much, sir? 1500 shares, sir. Right? Same number of shares are there on the year end also, sir. Something like that. Now what do? We'll calculate the balance of shares after each transaction. That is how it will do. Next, what you do? Number of days, first transaction date to next transaction date. From here to here. Means 1000 shares were there for 3 months. Okay, 1200 this month, this is there for 6 months. If 1500 shares are there for 3 months. Yeah, then you apply 1000 into 3 by 12 plus 1200 into 6 by 12 plus 1500 into 3 by 12. It like this. We will be calculating. And we will derive weighted average number of shares. Okay, this is balance method. As I told you, my dear, whichever the method you want to follow. Your answer is going to be same. Without any doubt. Right. One more point before concluding this session. Right. I told you after 15 minutes. Once again, we have one more session. Right. We will continue the same standard. And after completion of this standard, I will take up one more small standard, quick revision. Okay. Right. See, okay, right. We told 30th 6. We told 31st 12. Correct. Which date? For that we have given very big information. This is given, not given by Ravi Kanth. It is given by the standard itself. Okay. What is that? General rule. Whenever the amount, the date, the consideration will be receivable. Today it is due to receive, sir. That date. Because if it is due to receive, that day only will recognize the journal entry. Receivable account debit to equity share capital. Because as per the agreement, it is due for receipt. That day only you should take it. Next, if it is incurred, correct, issued for, okay, it is issued for, okay, now it is issued for cash. Yeah, if it is issued for cash, then cash when it is receivable. It is voluntarily reinvestment of dividend. Okay, whenever your dividends are reinvested, dividends are declared means that day only dividends, correct, which date allowed, the dividends are declared, that date will say there is the date of transaction. Yeah, conversion of debt. Yeah, conversion of debt means in the agreement you must have mentioned the date will be convertible on so and so date. That is conversion date only will take it. Other way around. Which day interest is getting stopped, that day it has become equity share. Correct, na? That date also you can take it. Issued in lieu of financial instrument. Okay, same thing. That is when the interest is stopped. Same thing like financial instrument is again financial liability basically. Loan conversion. Yeah, settlement of a liability. Same date of settlement. Agreement date. Acquisition of an asset. Which date the asset can be recognized? Which date asset can be recognized in my books? That date only you are supposed to take it. Okay. right? Rendering service. Yeah, we are providing service. When the services are rendered, right? See the point. When I teach you, then it accrues to me, income accrues to me. That means that day only other party provided services, correct? So we should say payable account. We have got the things, na? Yeah, we have to pay them. Instead of paying them, we said we'll issue the equity share capital. So we'll say 2 equity share capital, 2 security premium, whatever, depending upon. If it is part of business combination, yes, date of acquisition. You must have learned about date of acquisition very clearly under Ind AS 103. Correct? Right. So it is a contingently issuable shares. Yes. Then when all the contingencies are satisfied, right? If it is a compulsorily convertible shares, correct? If it is compulsorily convertible shares, if I say, if there is anything, no, my dear, compulsory convertible shares, na, it is not contingent, because there is the only time is the different, correct? Na? It is convertible within 3 years. Perfect. It is convertible within 3 years. Time is not a contingency. That's why we will not bother about the. This is considered as basic only. We will assume this is already issued. It is not contingently convertible. The date compulsorily convertible debentures or compulsorily convertible preference shares are actually originally issued. That date only will be considered as date of issue of equity share. Even though it is not equity share today, it will be considered as equity share, and we will start using it for the basic EPS purpose. I hope you followed me, right? Obviously, if you have any question, you can put it in the comment, right? So that we will be able to answer you, right, my dear? Thank you. I'll see you after 15 minutes.